All right, as some of you guys may know, my name is Witchell Joseph. I'm not a financial advisor, so everything's for educational purposes. So we're gonna dive into what we were talking about yesterday, and then move forward into what's been going on in the market lately and how I've been able to take advantage of it. But let's start with the terms from yesterday. All right, you guys see this? You guys can see my screen. All right. So just to recap from yesterday's class, we talked about volatility and we talked about liquidity. So whenever you're looking for an options trade to take, you want to make sure that it has a good enough volatility for you as far as how much it's supposed to move by a certain time, and liquidity, which is how easily is it to get in and outside of trades. All right, one moment, guys. I'm gonna grab a glass of water. All right, guys, and then some more people. All right, so as you guys know, all the classes are being recorded. If you're interested in getting the recordings of class, sign up for my coffee page. The link is in the chat. But picking up from where we left off, we spoke about volatility. Peace, 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 everybody. Thank you. We spoke about volatility and we spoke about liquidity. So can somebody tell me?
Headphones too.
You guys might mute
the headphones. It's still not.
So
there you are. We were worried about you. What's the plan equal war?
Nordic land cannot be stopped.
My muting. Thanks. All right. So can anybody tell me what is liquidity? Does anybody remember from yesterday? Well, liquidity is how easy is it to get in or inside or outside of trades. No problem, God, you're excused. So liquidity is about how easily it is to get inside or out of trade. So many times you'll go and trade options and you won't know better. You'll pick the wrong option and nobody's buying it. You were the one buyer and now you're stuck. You don't want that to happen. Then you can't sell, you can't make your profits, even if it does go in your direction. So let's make sure that we pick liquidity. Now, can anybody tell me how do we know how do we gauge liquidity? Anybody remember? How do we gauge liquidity? How do we know if the object is liquid?
Volume.
Volume, yep, volume is one way. What's another way?
Open interest.
Open interest. All right, and then what's the other way? There's something else you could just right off the bat you could look at that will tell you right off the bat. The spread, the bid and the ask spread. If it's a tight spread, it's liquid. That means buyers and sellers are agreeing on price. But if it's a wide spread, then they can't agree and you lose money in the spread. Does that make sense, guys? You guys remember the bid ask spread I went over yesterday? Or do you guys want me to go over it again?
One more time, please.
All right, so let me see. Do I have it on this? I have to open up the other one. Let's see. I'm gonna show you. Okay, so here's what I'll do. I'll show you an example. You guys can still see my screen. You guys can still see my screen. I'm gonna assume you guys see my screen. So I'm on TD Ameritrade right now. Do you guys see the option chain? So I'm looking at Apple, right? And let's say if I was looking at the options for this week, do you see right here where it says bid and where it says ask? The bid,
I still see the PowerPoint.
okay, so I'm probably gotta stop sharing it and then reshare it. All right. Reshare. All right, you guys should be able to see it about now. You guys see it?
Yeah.
All right. So the bid and the ask. So you see right here it says bid and right here it says ask. So this is the option chain. This is the December, this is this Friday expiration date. So right here, 167, this will be at the money right here. So you're gonna notice, let's say we want to buy this option right here, the call, the 167.5 call. You'll see that the bid is $1.20 and the ask is $1.27. You guys see that? So the bid is what people is the price that people want to buy it at. The ask is the price that that sellers want to sell it at. In order for a transaction to happen, they have to meet in the middle. So the mid price might be like 233. I'm sorry, 127 and 120. So 124. Does that make sense to you guys? So this is
Yeah.
this is a fairly tight spread. But if you go far out the money, you'll see some bad spreads. This one doesn't really, let me see, go this way. I'll do that in the money. Probably gotta go further out to see bad spreads. So Apple doesn't really have that many doesn't have bad spreads. Let's go to another stock. EWZ, this is Brazil ETF. So let's see, if you go out the money here, it barely even has, let me see, what if I go out further? Maybe if I go further out, you can see some bad spreads. What has a bad spread? Open. All right, trying to find some examples of bad spreads, but they're not really that bad over here. I probably gotta go. But basically, if the numbers were not close together, let's say if this right here was 5 and this right here was 100, then that would be a bad spread because the numbers are so far away from each other. All right, and it's not very liquid, so it's gonna be hard to get out at a decent price. All right, so that's the bid ask spread. Now let me go back to the PowerPoint. All right, so I explained that. You guys know what gap up and gap down is. That's when the price shoots up from the previous day because of pre-market and after hours activity. Going long means you expect it to go up. Going short means you expect it to go down. Day trading is when you sell the same day you buy something, you sell it. That's a day trade. All right. Swing trade is when you hold it overnight. Once you hold that trade overnight and it passed the 1 day mark, you're a swing trader. So swing trader can be 1 day out to like months and years even, right? And leaps are long-term options that have about a year of expiration on them. All right. So any questions about these terms before I move on? All right, so I'm assuming you guys know this. So then we spoke about order type. All right. So can somebody tell me, is a market order an aggressive order or a passive order? This is from yesterday review. Anybody? All right. Anybody?
I would go with passive.
Well, here's the thing. What moves price? Do you know what moves price? All right, or better yet, do passive orders move price or do aggressive orders move price? That's the question for you.
How we think aggressive.
Exactly. So the only thing that moves price is aggressive buying and aggressive selling. That's what makes the price move. You understand? So it's when people are taking, so market order is when you buy it at whatever price the market is telling you at the moment. Does that make sense? So basically you're sacrificing price to get in immediately. Does that make sense? So that
Yeah.
means that, yeah, because otherwise you would do what's called a limit order where let's say the market is I'm telling you to get in, it costs $50. You might be like, you know what? I'll put it at 35. I'll put it at 40. Because then you're being passive and you're waiting for the chance for the market to come to you. But the market may not come to you. But so let me just do one at a time. So the market orders, like I said, you're sacrificing time, you're sacrificing price to get in right away. So let's say like a stock breaks out right away, it's breaking out and you see it before your eyes and you've been following it, you know that it's a good time to get in. But because it's breaking out, the price is moving so quickly before your eyes. So if you hit market order, immediately whatever price it is in the market at that exact instant, it's the price that you're gonna get filled at. All right. So that's the benefits of market order, but you're gonna pay more money most of the times to get in. Now, the other type of order, so that's the aggressive one. So the other type of order is the limit order. All right. So remember I said, the only thing that moves price is aggressive buying and aggressive selling. That's the only thing that makes price move. Now, when it comes to the orders, the market orders are the aggressive orders. The limit orders are the passive orders. So let's talk about limit orders. So limit orders, to give you control over your entry and exit price. So like I said before, let's say the price is at $50. I don't have to get in at $58. If I get in at $50 instantly, that's a market order. But if I say, okay, let me get in at $40, I could put in an order at 40 and wait for the market to come to me. But the only problem is that there's no guarantee that the market will come to me. So that order might never get filled. Any questions on market orders and limit orders? Is that clear? You guys want me to repeat that? Some of you guys know. So, all right. Okay, so all right, so now this is gonna this is where it's gonna get a little bit more complicated, a little bit. But I want you guys to understand that you have to understand the auction process of the market. Like it's literally a market. And you have to understand, how do they take orders? How do they execute orders? How do orders get filled? How do they facilitate trade? So this is more of an inside, like a back office look. So let me pull this up for you guys. Hold on. All right here. All right. You guys still see my screen? All right. So let's get all right. Let's get into this. All right. Make this a little bit bigger. All right. So when you even when you buy stocks, right? You're not paying for the real value of the company. Instead, you're paying for the most popular story that people believe about these companies. So basically, people don't pick companies that they think are best. Instead, they pick what they think other people will choose as the best companies. Should I run that back? So I'll run it back. So we don't pay for the real value of companies. We just pay for what's the most popular story about these companies that everybody believes. You understand? Like there's some companies that come out, they haven't even made one car or one product, but then their stock price is shooting up. So they're not worth that. But people believe that they could be, and that's what is really going on. So, like I was saying, the only thing that moves price is aggressive buying and aggressive selling. So let's talk about the auction process. Every transaction, there's a buyer and there's a seller. But understand, one side is aggressive, the other side is passive. So every single transaction that happens in the market, there's one aggressive side and there's one passive side. So we already know the aggressive orders are market orders. The passive orders are limit orders. And here's what you have to understand. Limit orders add liquidity to the market. Market orders take away liquidity from the market. I know you guys got some questions. Let me just stop right there for a second. Any questions, guys? No questions? I'm assuming you guys are clear. If you guys don't ask any questions. But just to reiterate, I'll reiterate it one more time, just for the people that are too shy to ask questions. So we don't pay for the real value of the company. It's what people think. People don't choose what they think is the best. It's what they think other people think is the best. You know, so we realize it's an opinion type of game that we're playing, and that people that are aggressive, they're gonna move price around. But every time sale goes down, there's a passive person that has a order that they're just chilling with, and then there's somebody else that's just trying to buy it immediately. All right. So because of that, people that have orders that are chilling, they feed the people that are trying to get in right away aggressively. All right. So I hope that's clear enough for you guys. I'm gonna switch gears for a second. This drives the premium. So yes, it does drive the premium too. Because if you have a lot of people that are trying to get in aggressively, the premium is gonna shoot up. You understand? Because they don't care what price it is. They're like, get me in right now. And all that does is shoot a price, because what moves price? Aggressive buying and aggressive selling. So I think that's clear. I think that's clear, guys. So again, if you want the recordings in the chat, yeah, if you want the recordings, the link, let me drop that. We drop that in the chat. The link to my coffee is in the chat. All right, but now let's talk about what happened today in the market. Let's switch gears for a second. Let's pull up the chart. Oh, no, wrong one, not here. Let's go into the market, and then let's also look at Apple, because Apple is the beast, guys, and I'm going to show you guys why. Yeah. All right, you guys able to see my screen? All right. Let's start with the general market. Let's go to the daily. Take off these indicators for a second. For a second. So this is the market on the daily. So this is what happened today, guys. The market tanked. You see that? The market opened at 462. It finished at 455, which is a fairly big move because the market doesn't always move that big. But here's the main thing. Friday, so the market was going up. Then on Friday, it kind of fell off a cliff. And then on Monday, so here's the thing, like, so come Friday, you would have seen this, you'd be like, okay, so the market is selling off. But then Monday, this happens. So you're like, well, what is going on? And then today, this happens. So now you're like, okay, so we're really gonna sell off now. The market's probably really gonna sell off now because it crossed a certain line. You know, it broke the lows of Friday, and Friday was probably dramatic as it was. But now here's something I want you guys to know, right? So the SPY, the S&P 500, that is the top 500 most powerful, best companies in our economy, right? Now, until recently, you guys mind muting your.
Are you gonna stop?
Yeah, so understand. So look, so understand what's really going on in the market right now. So the market tanked today, but before like maybe 2 weeks ago, Apple had the biggest market cap. That means that Apple was the biggest company in the whole stock market. Until recently, Microsoft surpassed Apple. All right. But still, Apple is a big boy. Apple is a big dog. You understand? Apple is really, really strong. So now the market dropped, and one of the top stocks in the market in the S&P 500 is Apple. So, but look what Apple did today.
What?
Look what Apple did today. And Apple is inside of the S&P 500. So Apple did phenomenal today, up 3%. Look at that big green candle today. And not only that, it basically came and retested the all-time highs. You guys see that?
Yeah.
So
Wow.
yeah, so let me show you guys something, right? So this is what I was able to do just today, just hopping in today off of I just bought one contract for $10. And look what it did though for today. Let's see where is it?
Oh my God.
Where is it? I bought out the money. Okay, let me share the right screen. Boom. You guys, am I still sharing? Should I stop sharing? Okay. Buttons in the way. This is I ended up taking some money out of my Robinhood, so I only had a little bit of money in there. So I was like, let me just play with that. You know what I mean? And let me show you guys what Apple did today. You guys gonna be a little bit amazed at what Apple did today, just on the option chain. Loading. All right, look at that, guys. So I bought the 172.5 call today because once I seen Apple breaking out, I was like, let me hop in. But look at this. At one point, this came down to really, it says $3, but I remember it came down to $2. It came down to like $2. It finished the day at 29. Do you guys see that? So from $2 to $29 per contract. So I got in at like $10. You understand? I got in around here, $10. So my $10 went to 29 just today. You understand? So that's already triple. You guys see that? This is just today. And had I gone in early from the morning, I would have, what's that? 12x? That's more than 10x. You know what I mean? Like almost, almost 15x.
So if the Apple is an SPY, what made you choose to get into Apple today versus the SPY? Because SPY was kind of going down today.
Yeah, so understand, like you said, Apple is inside of SPY. Not only is Apple inside of SPY, it's one of the heaviest ones inside of SPY. So normally, right, if you're the biggest market cap inside of a ETF, when it does good, you drag it along because you're doing good. When it does bad, you drag it down because you're doing bad. So the fact that it was doing good while the market was doing bad, and it's the biggest, one of the biggest ones, that told me, hey, we should see what's up with Apple because it's beating the market. It's you know what I mean? Does that make sense to you?
Yeah, just using a little strategy. I think when you know a lot of the other ones that are inside of there and you're just strategic on which ones to choose inside, it definitely helps to work out in this favor like that.
Because then if you look at the chart now, so like in SPY, the big companies are Apple, Microsoft, Facebook, Amazon, and whatever else I throw in there, right? But you look at Facebook today. You see Facebook today? Look at Microsoft today. Microsoft MS, Mike. I don't know Microsoft symbol, Microsoft MSFP. Look at Microsoft today. Microsoft is down today. Let's look at Amazon today. These are the other big players in that. Oh, I got it right. AMZN. These are the other big players. You guys see that? Amazon down. So if you see that all these other players are down, but those one player in the same index is up, that tells me that there's something special about Apple, you know? And that's basically what I want. But here's the thing. I noticed this ever since last week. Apple already started flexing its muscles. Look at this. So last week, yeah, look at this last week. Like at this point right here, on the 17th, 18th, see 18th, 19th. This is when Apple, because remember, Apple was struggling to hit in the 150. Like, let me zoom this. Let me zoom on this a little bit so you guys can see. Right? We got about 10 minutes, guys. So notice, Apple came up here. It tested 156. That was the all-time high for a while. And like, so that's September 8th. So look, for a whole month, Apple came down. Apple tried to come up again, retest, but then it failed. But then last week, Apple just broke through that level. You guys see that? Matter of fact, let me see. Let me guys show you guys why this is such a good stock to trade options on right now. So you see Apple came down, it found support right here. But here's the main thing. Hold on, let me do this. Because I want to write on this. I'm gonna hide this. What? So you guys remember I taught you guys about break and retest strategy. So this is break and retest strategy right here. I'll make this bigger. I can write on it. Yeah. All right, and look at this right here, guys. So this was the level right here, right? You guys see that? So the way that price likes to operate, it likes to break out. I'm gonna use what color? I'll use this color. Price likes to break out, right? Retest the line that it broke out from, and then continue shooting in the original direction. You guys see that? So it was a successful breakout retest because it really came down to that spot, and then now it's shooting back in the original direction. So right now, Apple is very bullish, and I'm looking at options for January and even April of next year, just because of how strongly I feel about Apple. And now, to really do a full evaluation, you have to look at the other time frames. So let me erase these real quick. So you look at the other time frames. So let's look at the weekly. Look, on the weekly, Apple is about to break the high, which is going to be a signal for the calls. Once Apple breaks this high, which is basically right there from where it is right now, it's going to keep going further up. Now, look at the monthly. You see how strong Apple is this month. And you see that it came down and it just started coming up from last month. So it still has a lot of room to shoot up from. Has a lot of, and this is all-time highs. So it's going to keep making all-time highs. And then what I like to do is look at the bigger. Let's look at the quarterly, 3 month. Look at the quarterly. Look at Apple on the quarter, 6 months. Look at Apple on 6 months. And then even you even want to look at it on the year. Look at Apple on the year, guys. So this is 2021, this is 2020, this is 2019, and this is 2018. So look at the numbers Apple's been doing since 2018. Just saying, guys. If you're looking to place to park your money, I would bet on Apple, even shares, but I would have to buy a lot of shares, so I just play options. If I get more leverage, I can make more money with less. So now let's go back on the daily. So now understand this too. Let me see if I put my lines back on. So you see that blue line right there? Once Apple broke that blue line right there, that was a signal to hop in to into calls. Because this is the day, this is yesterday. Once it broke yesterday's high and kept going strong, I knew it was time to get in. And then not only that, look at this, guys. Look at the RSI. Look at the RSI. You see that it did diverge, it did come down, but you see that it's coming back up. It made room to keep going up. That's what it did. It basically made room to keep going up. And then look at the ATR, guys. Right now, Apple is moving $3, an average of $3.46 a day. Today alone, it moved about $5 though. Moved $5, so it moved to the 3.16%, which is pretty big. All right. So any questions? No questions, guys? So, all right. So let's talk about the market. All right. So looking at the market, look what happened to the market. The market dropped $9 today. Like, wow. And if you look at the lines that I drew, you'll see that Apple, I'm sorry, not Apple. You'll see that the market, it had dropped, right? Back in October, scary drop, but then it came back, it rallied. And you'll notice that these lines that I drew them from months ago. So these lines are still being respected till today. And the main thing is that you see that at one point, this was a big deal. Why? Because last time that the price came down to this green channel was COVID. Since then, it never came back there. Even it came down to the white line, you know, it came down to, and then it came inside the channel. Every time it just kept coming down to like the white line inside the channel. So this was the first time it broke in a while that it broke that white line. It came down, and then look what it did. Same thing. This is the principle I keep telling you guys about, which is breakout and retest. So look at this. So right here, you guys see that? So I don't know, maybe it's the same green color, but it's just like what I was saying before. Price, look, what did it do from this level? It broke out from this level. Then what did it do? It came back and retested that level. Then what did it do? It shot back in the original direction. Honestly, I thought this was gonna keep going, but it didn't. It didn't keep going as I thought it was gonna keep going. So it just came back and made like a head and shoulders pattern, which is still a pattern to be respected if you so basically off the candlesticks alone, you can know what's going on. All right, you can know what's going on with prices from the candlesticks alone. So it did that breakout retest, and then that's the same thing I was telling you that Apple did today. The same breakout retest shoot. All right, got about 2 minutes left, guys. So right now, based off how the market is looking, we're probably gonna sell off. We're probably gonna sell off, guys. Am I muting you?
So you think the SPY is gonna keep going down?
Oh yeah, I do. I think the SPY is gonna keep going down because look out from a key level, and like it's strong. Like so the main thing is the candlesticks themselves. They tell you things. So like if you look at it, look at how this closed at the bottom and there's no wick. And if I bring up my indicators, look at how fast it's moving and it's picking up speed. And then look at the volume. The volume's increasing. Do you see that? Volume's increasing, RSI is pointing down, and it's picking up speed. And it broke the key level. Yeah, the SPY is going down. How far? I don't know, but it's at least going down. Like it should, because it already broke out, retested, and now it's shooting back now.
Mm-hmm.
You see that?
Mm-hmm.
Yeah, so that's my confirmations on why the SPY is gonna shoot down. And to take advantage of it, I'm gonna play puts on the SPY or calls on SDS. All right, so that's basically it for today, guys. Thank you for coming and showing up. If you guys are interested in the recordings, the link is in the description.
Wait, you're gonna do calls on which one?
Calls on SDS. SDS is inverse of the SPY. So whatever the SPY does, does the opposite.
Okay. That's V. V is in Victor.
D as in Daniel, SDS. SDS.
Oh, okay.
Yeah, I just typed it in the chat. Yeah. So yeah, but if you join my coffee, you can find my plays. You can follow me, all right?